Great. All right, well, for those of you who have never been to mini AMA, we run these about twice a month. So AMA, if you're not familiar, means Ask Me Anything. So this is a monthly virtual education series where we're joined by subject matter experts to answer your questions. And there's a variety of different topics. So today we're really excited. We have an amazing lineup of people with just a great expertise in how to fund your startup without venture capital. So I'm Maria Plussel. I'm the executive director of Minnestar. Minnestar, if you're not familiar, we're the nonprofit community organization that's built to nurture and engage those interested in technology through meaningful connection. We run a lot of different community gatherings around town, if you're familiar with Mini Bar or Mini Demo, and we also run this, Mini AMA. So before we introduce our presenters, like I said, just a little bit of housekeeping items here. Questions, we encourage you to, from the get-go, from right now, use the chat, put your questions in there. You'll hear a little bit when we kick off here about the different experiences and the expertises that our panelists have here, but definitely throw those questions in the chat. And yeah, like I said, we're excited to have these three here. So really brief intro, and then I want to hear from them a little bit more. They're all incredible leaders and experts, like I said. So we have Sam Ndely. He is the Director of Employer Inclusivity at the Center for Economic Inclusion. He's a former business consultant at META, also co-founder of Gravity. We have Amber Christian. He's the founder of Wonderly Software Solutions, also a Mini Demo grad. And we have Ben Edwards, who is a startup advisor, co-founder of Smart Things, and also a co-founder of Minnestar way back in the day. So really excited to have all three of them here. With that, let's jump in and learn a little bit about each of you. Tell us a little bit about yourself and your experience with fundraising, and why don't we start with you, Ben?
All right. Well, thanks for the introduction for sure. I like to think of myself as sort of a community catalyzer, and I do like to start organizations and companies, and I like the way that companies that feel in the early days and are small, and you're sort of involved with everything. So I like, if I can figure out a way to like have a company, just keep it small and fun, that would be ideal for me. But like you said, started Mini Bar way back in the day, and that was because I wanted the community in the Twin Cities to sort of come together. I saw all these disparate things happening, and I was like, hey, let's all have a conversation together, and it all just started from that. But along the way, in the last 10 or so years, I've had the opportunity to run a few crowdfunding campaigns, and so the bulk of my answers today will probably be centered around raising money through crowdfunding. Not that that's the only thing you get from crowdfunding. You actually get quite a bit from crowdfunding in terms of data, validation, information, and that you can act on to sort of change the direction of your business or your product. So totally up for talking about that and getting into the very detailed bits about running a crowdfunding campaign or going high level about that, because I just think it's a good way to get a lot of information and some money for your business.
Excellent, thank you. And Sam, why don't we hear from you? Oh, you're muted.
I was on mute. Sorry about that. So I guess where I'll start off is my experience with just the whole fundraising process. So really, like, my journey in startups has kind of started around 2016 fully, when I co-founded Gravity with Alex Rodriguez, and we would host events and really Gravity, if you're not familiar, we are an organization based in the Twin Cities that's founded to help get people of color to break into the tech startup space within our ecosystem here locally. And really what we wanted to do was highlight some of the challenges that founders of color have when it comes to fundraising, when it comes to venture capital, when it comes to even crowdfunding in certain instances. And so we would be able to highlight different founders to have them provide them a platform to tell their story. and also, help navigate through some challenges that newer founders would face when it comes to raising funds. And through that process, learned a lot about different stages of fundraising, right? And like the challenges that certain founders of color have when it comes to raising like a friends and family round. And that all contributes back to like the wealth gap in this country and challenges with that. And just founders of color not necessarily having the same type of network of wealth that their white counterparts do. So like, how do you mitigate some of those challenges if they can't even get past friends and family round to get to a Series A or a Series B round? So really trying to find alternative solutions to that, and looking at, how we can partner with organizations that can help, provide that gap when it comes to the friends and family round for founders of color, so that way they can develop the rest of their product or the prototype that they have for their app or whatever it may be, and get to a level where they'll be able to be investable from that standpoint. So my experience at Meta, I was providing, Meta is an organization similar to Gravity's mission. We at Meta, we focused on helping entrepreneurs of color succeed through providing technical assistance and access to capital. But traditionally, Meta had been an organization that focused on lending capital, which wasn't necessarily um, a route that a lot of tech startups would go for, because when you're building out an app, you're not necessarily generating revenue to be able to pay off a loan every month. You need patient capital or equity. So one of the things that we started at Meta in 2018 was the Meta $1 Million Challenge. So it was a pitch competition. It's the largest pitch competition for entrepreneurs of color in the country, powered by JP Morgan Chase, and helping like source the talent. It was a national competition too, so we got a lot of great companies from across the country that were able to participate in that program, and really started to dip our toes into like what it meant to be providing that patient capital product to entrepreneurs that we served and we were looking to serve. So that's been some of my experience thus far. Really what I'm working on now at the Center for Economic Inclusion, and some of my other experiences being on the board for Forge North, we're working on trying to help create a more inclusive culture when it comes to like the VC culture here in the Twin Cities. So working with VCs, having them look at their portfolio, saying, hey, how many diverse founders do you have in your portfolio? If you don't know where they are, let's get you connected to them so we can provide that opportunity. Because a lot of fundraising is like all about networking. And if you don't have access to networks, you're not going to be able to get in front of people who have money to help move your business forward. So that's been some of the challenges that I've heard during my time working in this space. And really what I'm just trying to do is connect people and provide people opportunities and have them use their platforms to help change some lives and grow some businesses. So
Awesome. Thanks, Sam. And then Amber.
So I'm Amber Christian. I'm the founder of Wonderly Software Solutions. I've had Wonderly for about 3 years now. And my experiences are probably a little different because I came into the startup world actually as an angel investor. I had a separate career as an SAP consultant and had my own company there. And so my first taste of funding early stage companies was from the investment side. So that's actually where I started. And I guess I got bit by the bug along the way, because then I decided to build a software tech company as well. So the last couple of years I've been building Wonderly Software Solutions, and our product is Bellasina. So we actually build a technology product to basically make your meetings run more effectively. That's essentially what we do. So a wide variety in background. I've actually done a lot of writing and speaking because of my previous career. And so I'm used to doing lots of writing, speaking nationally, internationally. It's kind of all part of the shtick that I was used to. So as a founder, I have almost a Swiss Army knife set of background things. Now, I have not fundraised at this stage for Wonderly Software Solutions, and I'm trying to figure out if it makes sense or not, which I suspect a lot of people on the call are also thinking about. And so lots of factors go into that decision too.
Fantastic. Well, as I mentioned, for those of you who joined us a little bit later, please use the chat functionality and put your questions in there. It can be on anything from, crowd fundraising to loans or grants or R&D tax credits. Throw everything in there and let us know what you want to know. We do have a few questions that came in first that we'll start with. And Sam, I know you have to hop off a little bit early, so we'll have you start with some of them, put you in the hot seat first.
Okay.
but one of the ones is, what do you wish you knew about fundraising before you started? So Sam, maybe in your context, when you're working with or have worked with new founders, um, thinking about that, like what are things that they wish that they knew when they started the process? And then
Yeah.
from Ben and Amber.
Yeah, I would say not all money is good money. So just because you get somebody to offer you investment doesn't mean that you have to take it. You have to understand the terms that you are signing up for, and make sure that you're maintaining the right amount of percentage of equity within your organization. So that way decisions aren't taken out of your realm of power, right? Also, some of the things that I try to advise my clients on when I was working with them is it is good to have a board of trusted advisors who have had experience raising money and understand how your company should be structured, and always have legal, whenever you're negotiating any kind of contract, like always, like that's one of the first things you should invest in is legal representation. If you are in a situation where you can't afford that, there's a lot of firms that do provide some pro bono contractual work that you can look into. So I can provide some of the ones that I've worked with in the past, but yeah, I would say those two things would be where I would start off with, and I'll let everybody else answer because I can go on as far as things that I wish that I knew, but I want to make sure that everybody got a chance to share their perspective on it.
That's awesome. Yeah, Ben, why don't we hear from you?
Well, I would echo what Sam said about not all money is good money. Just because money is available doesn't mean that you should take it. Just because there's a certain amount of money available doesn't mean you should take it all. I do believe that you should only take as much money as you think you'll need. There are some caveats and nuance around that with regards to the type of business you're running. When you think or how you think the market is going to be. If you think the market's going to be bad a year into the future, 18 months into the future, maybe you take more now. But I mean, I would just challenge everyone when they're considering taking outside investment or a loan, that you really think of like, what is it going to be used for? Why is it valuable at this point in time with your business? And can you possibly not do it? Like, I feel like bootstrapping is the one like sort of unsung thing about raising money is like, hey, well, raise money by like struggling and like, selling your product to people who give you money for that product. And so, yeah, that offers a lot of freedom and a lot of benefits as well. It's just not the growth and the glamour route. And so I often say like, hey, let's not talk about starting a startup, just talk about starting a business, like starting a business, startups are kind of a new thing, and people have always been starting businesses, and startups just come with a lot more expectations, I guess.
Right.
Yeah, that's a good point. Amber, do you have anything you want to add?
I like this concept of understanding what the expectations are going to be attached to the capital that you take. And I think our previous speakers have also echoed understanding the money you're taking, because not all money necessarily is good money. And sometimes you need to just do that because you might have to take money that maybe isn't really well connected or isn't going to open doors for you. So there's a whole variety of things you see. So some money is going to come in that's going to be a check, and you're not going to get any other help from them if you go to fundraise, and that's it. It's just a check, and that might be okay. But if all your money is just a check and it can't help you open doors or doesn't have connections or other networks, I think that goes back to Sam's point about not all money is good money and necessarily will help you advance the business. So something to think about if you do want to fundraise is really casting a net and understanding like where do they fit in the overall puzzle of being able to help you, because it's not just about the check. It should also be about help and people that you're talking to and people that are believing in your company. So if you do go to fundraise, I would also consider that as well.
I want to just, echo what Amber just mentioned. I think that's super important. And kind of Ben mentioned this a little bit. It's like recognizing the stage, the industry in, when your business and the stage you're at in fundraising. Because if you're like raising like your earlier rounds, like you want to be able to get some money to continue to grow your business. But when you get to like your Series A, like your Series B, it's like that's really about the investments, in my opinion, the investments that you're getting there are crucial in like making sure your business growth is sustainable. So those partners that are investing in you, like what doors can they open up, right? Kind of like what Amber mentioned, like if they can open up doors for like that contribute to like your bottom line, or like, you know, help you open up new markets for you to get into and identify new customers, or even if it's like you have connections internationally, if you want to scale that way, like those are some great things to consider when you're talking about taking money from an investor at that level, because they're providing a lot of money and they're looking for a return on that money. And if they don't have any skin in the game, that is going to help contribute to you being able to make that money, but they're just giving you money and expecting a return without providing any skin in the game, or helping leverage some of their networks, it may not turn out best for you, and you're going to do a lot more work than you have to do in that level. You know what I'm saying? So I think that's something also to consider.
Mm-hmm.
Yeah, that a lot of questions coming in the chat. One of them, I mean, you're talking about that early stage. I think this is a really good segue. So Samir wants to know, at what stage do you start thinking about raising money? How important is traction for someone new? And what is a good metric? Who wants to jump in on that one first?
Oh, look, Ben, you want to go on
that one? Well, I mean, there's plenty of metrics out there. I can speak from personal experience that, you know, we use crowdfunding, and I'm going to sound like a broken record, but we use crowdfunding early on as a way to actually prove out traction at Smart Things to potential seed investors. You know, we had been bootstrapping a prototyping phase. We then did a crowdfunding campaign in the summer of 2012. And it was really primarily to see, all right, is this idea resonating with other people in the market? Are they going to, put down $200, $300 to back our vision? And then once we had, thousands of people that said, yeah, we want to do that, we could then turn to investors and say, look, we've got, 4,000 people that have said that they are interested in what we're doing. We think we can bring this to market. And then they were like, yeah, that makes sense. So if you don't actually have a product or product traction, that can be a substitute. Crowdfunding can be a substitute for that traction. There's also frameworks and things that you can employ to sort of understand your traction, like the bullseye framework, where you talk about what's probable and what's working. I could probably put some links in the to some articles about that, or you could just Google the bullseye framework. But yeah, I mean, I think it's hard to know exactly what time is the right time to take money. You always know when you're too late, but like sometimes it's hard to know if you're too early, and that's also a consideration.
Amber, why don't we go to you?
I would add, if you're looking for some metrics, you're looking for something to measure, right? Well, what do you actually share with people? If you haven't built a product, you could actually try to do pre-sales of a product to demonstrate some traction. So that's a possibility. I wish I had done that, but for other reasons I didn't on mine. The other thing you could think about if you're in the market is people want to understand, is this thing sticky? Are they going to use this product? Are they going to come back to this? Are they going to be a repeat buyer? Are they going to churn? So you could think about looking at things like, I know Microsoft actually looks a lot at monthly active users and daily active users. That's, some of the biggest of the big of saying, are people really coming to your platform? So that's a couple of additional things you could think about in how do you actually demonstrate that your idea has some more merit. But even outside of the fundraising one, let's not forget to visit money on the table that most people leave, which is the R&D tax credit and some of that other stuff. So I know we'll come back to that, because that's one that most people leave on the table and they have no idea they probably qualify for that too. So before you even go get that capital, make sure you've optimized the capital you're already spending as part of one of the things that I always think about.
Yeah, I mean, I would just agree with everything that was said. I think that in regards to finding the right time to fundraise, like, it's funny because everybody's situation is different, right? Every founder doesn't start off with the same amount of resources to bootstrap. So like telling somebody to bootstrap until you can't anymore means something different to somebody else. Like some people are married, some people have kids, some people are single, some people have family that they can lean on, some people have friend's house they can stay at and not have to pay rent. And there's all these different scenarios. So you have to like really do what Ben said is right for you. And when you feel like sometimes you don't know until it's too late. But I think that really from a business standpoint, I think the right time to fundraise is when you feel like you're ready to go to market and like you can get a return on somebody's investment. I think that's really the best time to really start fundraising and really start saying, I'm ready to take other people's money, because that's a big responsibility. But if you don't have that figured out, and if you don't have that secret sauce yet, I think the other alternative ways of raising capital is what I would suggest doing first before you even try going to like the VC route, because it gets kind of vicious at that standpoint. The expectations change drastically.
Mm-hmm.
That's really good feedback. So there's a lot of questions coming in about crowdfunding. And before I get to that, Amber, you had mentioned R&D tax credits. Can you talk a little bit more about that? Because maybe there's people on the call that don't even know that that's an option for them.
Mm-hmm. So I spent many years working on finance systems for large corporations. And one of the things that you know when you design some of the accounting systems and the tracking and all those things, you learn about all kinds of interesting things like R&D tax credits. So most people think, oh, this is just the big companies that qualify it. Mm-mm. All of us little guys, we all qualify for it too. What it is it's really about people that are developing or designing new products or processes, enhancing existing products or processes, which is pretty much all of us, and developing or improving upon existing prototypes and software. It's really broad, and the IRS has a multi-part test for kind of what falls under it, but it is a great way for people that are spending dollars investing in building software, investing in designers, investing in testers, that kind of that whole process around software. It's a great way to get a federal credit back. A lot of people don't even realize payroll tax can qualify as part of it as well. You don't even have to be a profitable company to get the R&D tax credit. And that's why I talk about till I'm blue in the face, and every once in a while somebody hears me and doesn't and goes, oh my gosh, because just to give some statistics around, you can get back in a credit typically around 10% of your spend around on these R&D activities. That's a huge when you think about it. And it should be done for everybody, from bootstrappers to anybody who's raised venture or angel money, or anybody that's investing in building some of this out should really be looking at this. And if you talk to your tax person and they don't know what it is, find one that does, because it's a pretty important credit to extend your runway.
Thank you. Thank you for sharing that. I'm going to jump into some of the questions that we're having in the chat. I'm going to go all the way back up to Benjamin. Benjamin said, I would like to know which crowdfunding platform is best in your opinion, and what fees are normal for launching a crowdfunding campaign. I've looked at a few and I've seen prices as much as $1,500 for something I'm unsure will work. So what's your opinion on paying for crowdfunding?
I don't want to take all the crowdfunding ones. If anyone else has an idea.
No, not me. Sorry, man, all you.
You know, I will say that a very important early decision you need to make if you've decided that crowdfunding is something you want to investigate is, do you go onto a platform or do you try to do it yourself? There are certainly tools and things that are helpful to where you can stand up a crowdfunding campaign on your own website. You don't need to use a Kickstarter or an Indiegogo or a more niche one. I've had experience with both. My last crowdfunding campaign was with Misty Robotics in 2017, and we did it on our own website, and that has its own pros. The main pro is that you manage the relationship with the customer or the backer much more closely. You don't have to go through the intermediary of the third party. There's also some savings you can get with regards to the fees that those platforms charge. I'm not up to date on the fees. I think it's around 5% that you're going to pay at least to the Kickstarters and the Indiegogos. And there are outfits out there that will help you manage the campaign, get your campaign set up for, and those can probably range from, you know, a few $100s to thousands of dollars for you know, creating videos. I mean, the Misty Robotics video cost $100,000 just to produce. So there's a lot that can go into those videos and to the whole campaign. But I would say that, going with a Kickstarter or an Indiegogo does bring an automatic audience to you. You don't have to do as much audience development, although you still should in all cases, whether or not you're doing it on your own or with a campaign. Audience development and reaching out to your own network and building that up is, I consider it, crucial. And to Sam's point he made in his introduction, I think it is one of the biggest disparities that we see is that, people that have networks that are placed prominently, who have capital to be able to put into things like this, it's such an advantage. And it made me think like, well, we should be doing something as angel investors to really help this out. Like, we should circulate a pact that everyone signs that says every time I invest in a friends and family round, I'm going to equally invest in a person of color business or something. So that we can start to even this out. But I can talk to you about that later, Sam. And we can.
Yeah, definitely would love to. Yeah, and just to kind of piggyback off of what Ben was talking about, another platform that I found when I was working at Meta that has been really great for a lot of female founders is iPhone Women. They have really good terms, and they actually help with promotion. Like they'll like I had some clients that went out there, they flew them out to New York and like filmed a whole promo video for them and helped them out with a lot of different things. So I've heard some positive things about that platform too, and their fees aren't as astronomical as some of the other platforms. So that's another one that I would suggest. But I think I'm gonna defer all the crowdfunding expertise to Ben.
No, this really segues really nicely into the next question, which is how can crowdfunding be successful when you don't have your own crowd to bring to it, right? So, I mean, Sam, you had touched on this earlier. Anything that you all want to add to this?
Yeah, it can be. I mean, it's obviously a challenge, and I think the biggest thing is like what's really key in people who don't necessarily have the networks is you have to understand, number one, your product and your story, and then be able to create a narrative that helps get your story out there, so that way it connects with people who would want to invest in you, right? When you're in a crowdfunding, platform, using that, it's just having an effective, like telling an effective story really, and conveying like the message of your business. That personal connection is really nice, but then like if you have a good solid business behind what you're trying to promote, and it makes sense, and people would want to either use your service, buy the product, use the service that you're offering, or see it in the marketplace, then I think that helps with like gaining traction. But if you don't know how to convey your story of your business, no matter who you are, you're gonna struggle, especially when you're trying to get people to buy in. So I think just focusing on that is the first thing to do, and then like trying to stand out a little bit. So like being able to have effective, like consistent promotion and putting content out. A lot of people leverage social media and they're able to get traction, but connecting with media outlets that can help tell your story as well too, like so doing interviews, or like leveraging platforms like, I would say, YouTube, even Instagram has been really great with promoting a lot of companies. Twitter is also really good when it comes to tech, getting people behind you on those platforms as well too. Facebook, not as much. I mean, I would say Twitter and YouTube and LinkedIn as well are also really effective when you talk about social media platforms for like raising money or raising awareness for your company. And when you share articles on those platforms, I feel like they travel a lot better. But and this like to the right people that actually could be connected to money. So versus Facebook, which stuff gets lost. There's so much stuff on there. So that's just my take on it.
Oh, that's really helpful. Doug has a question. It says, I realize this isn't an investment question per se, but how does a person break into the network of Minnesota startups in the first place? One introduction at a time, I guess, but other forums or blogs that you would recommend?
I think you should take this one. I feel like you're pretty well positioned to answer.
Well, I'll jump in after you all. How about that? Sam, why don't you start, and then we'll go Amber and Ben.
Yeah, I would say if you're talking about blogs or websites, Tech.mn has just revamped theirs, and they've done a really good job of sourcing a lot of information that helps, put a light on what's going on in the ecosystem of the marketplace. Organizations like Forge North are really trying to shine a light on what's going on. Minnestar, Mini Demo, what we're doing over at Gravity. You have just organizations like that. I think are doing really well. The Startup Week, if you're looking for events, that happens every year, and they're working to continue to innovate on their events and stuff that they're doing. There's different accelerator programs too that you can get involved with, like Techstars and like the Farm to Fork if you're in ag, or solutions for that, or you have Luna Startups. So those are just some of the name a few that I've worked with personally that could really help out with some stuff. And yeah, the information is out there. You just gotta like pay attention a little bit more. You're gonna have to step out of your comfort zone and meet some people that you may not have ever thought you'd talk to. But I think once you do and once you get in, like they do a really good job of helping sift you through things. It's kind of weird now though with COVID happening. Like I would say if you're on this call now, then that's a good first step because you're at home and you're able to get the information. But even if you're not on the call now, but you're watching later on, like I think just gaining information about that stuff is really good. And just like following some of the pages on social and like seeing what they're talking about, and their information is being shared all the time. And all of us really do a good job of sharing each other's information. So yeah.
Amber, anything you want to add?
Well, I have to pick something different because Sam added a lot. I would say I would add two things to that. Founders Live is a monthly pitch competition, and that would allow you to meet a lot of other early stage startups and has opportunities to meet other founders and people interested in the startup ecosystem. They run that competition every month, and the winner gets like 5,000 in AWS credits for that. And so that's a great place to just to meet a friendly crowd that's looking to support each other and to meet each other. The second thing I would do is once I met a couple of these founders, I would go on Twitter, I would start following them, and I would find out who they're retweeting, because that's going to give you the next set of the network, and then that's going to give you the next set of the network because of Twitter's algorithms. So I actually use them as well because it helps you see who's connected to who, and you'll start to figure out who these people are, because it's not like there's a directory of us. And so one by one, you could start to find us through those two sources. So we'll see what Ben adds on top of that.
Yeah, Ben.
Well, you guys have done a great job outlining all the things. I would say that like in non-COVID times, going and getting out to the events, forcing yourself to walk up to someone, it can be difficult even for extroverts. I sometimes think like that, just if you're in an environment you don't know anyone, in that case, like this times where most of the meetings are virtual can actually help in those situations so that you can reach out to people in a way that's less threatening. But definitely you need to like be meeting people. People are generally wanting to help. They'll at least give you advice, if not help. So, get to know people. They might know someone, at the end of every conversation, ask them like, hey, who else should I talk to? So yeah, I think it's just, you can't overstate enough how important it is, like who you know, and it's just such a true adage. But everything that's ever happened, like pretty much good for me in my career, is because of like the connections I've made. So
yeah, I think the only thing that I would add, this community has grown exponentially in the last 5 years. So if you are, Twin Cities locally, I would be, since we are in COVID times, thinking about virtual events, think about Slack communities, think about get on mailing lists of Mini-NO and Tech.MN and all these other publications that really focus on the startup ecosystem. Connect with Forge North. That's kind of a coalition of a lot of different groups around town that are working in both tech and startup and just like broadly ecosystem work. And get on the mailing list of a lot of different groups that are of interest to you. So it could be Lunar is a accelerator around here, like it could be our mailing list. We usually do every month a roundup of all of the virtual tech and tech adjacent events around town. So I would start there. There's a lot of resources though that, and as someone who is, I think, an outgoing introvert, it can be a lot sometimes, but just, dedicate some time each week. All right, so jump back into the questions. Tad wants to know, for crowdfunding, is offering future app subscription discounts in exchange for current development dollars a viable strategy? If so, are there examples of mobile app companies that have successfully raised funds via crowdfunding? Ben?
So I don't have a good example of a mobile company that's done this, but there's many proxies in the video game business. People do this with video games or board games where they're selling the vision of the product. And that's really what you're doing, whether or not you're walking into a VC's office or putting up a crowdfunding page. You're selling a vision, and you need to get people to that place that they'll buy into that vision. They share the vision with you, and they want to see that vision come into the world. So I don't see any reason why a mobile app company can't follow the same steps as everyone else on those platforms. If you have a good vision, if you think that it's something that would resonate, I mean, don't just like put it up there and hope. You got to like ask people beforehand, do your research, come up with a vision that gets people who you're sitting across the table from's eyes to light up, and then create your campaign. But yeah, I mean, I'm sure there's hundreds, if not thousands, of mobile apps out there that are being crowdfunded too, if you look on the big platforms.
Awesome. All right, jumping back into the questions here. Thank you. Keep them coming in the chat. From Chris. Chris, I believe, is looking for some advice here. So he says, I've worked on Samba, sorry if I'm mispronouncing that, for more than 20 years. It's cornerstone software. It's been called the Linux stealth weapon, and it's a key component for integrating Linux and BSD systems into Windows environments. I've worked with many startups over the years trying to integrate Samba into their product. It's not an easy job because most developers aim at a Linux, USIX tech platform, and Windows is just plain different. I'm building an open source toolkit for the integration. I know how critical this kind of software is for businesses, particularly storage startups. It's difficult, however, to convince others that they should invest in this work. So basically looking for advice on the following. Looking to be able to have enough funding to maintain my own income and buy or borrow required hardware, enough traction to attract developers to the project, it's open source, and the prospect of building this into a small DE. So basically, any advice that you have for Chris here? Anyone want to jump in?
I guess I would say who has this problem the most is where I would start, as opposed to trying to convince one startup at a time. Who really has a big problem with this, that might have it in a much bigger way than you'd thought of, that may be willing to put some dollars at solving it. And that's actually where I would start, because you're right, getting those early ones to invest in it can be like pulling teeth, right? You're like, yeah, it's not this hard. and sometimes it just is for some of the early adopters. So I would maybe look at someone that might be willing to experiment, or that may really have this in a big way that this could be a big solve for. That's where I would start.
Yeah, I think that's great advice.
Yeah, I mean, it sounds like, it is almost like you want to supply the pickaxes and the shovels for the gold rush. And so you're providing a necessary service that maybe many people don't know of or don't think of, or it's not glamorous. It's not like the unicorn farm, as you posted in the comment. And so, yeah, I mean, I would say you got to find those people who need that thing that you want, and yeah, convince a few of them. It's hard to think of a market as like this broad thing, and that's why people create personas and think about like, okay, well, this is just this one person in this one role in this company. If I can convince this person, then I can extrapolate and say, well, there's thousands of that person. So yeah, really identifying that, and if you have a hard time doing that, then that might be a sign that it's not as viable as you might think. But if you can easily rattle off a dozen people that you like, oh yeah, that person and that person, that person, contact them, ask them about it. So even if they can't throw money in, they can give you advice.
Thanks to everyone in the chat that's sharing a bunch of other resources, and David and Jeffrey, a bunch of people are sharing, different groups around town to get connected with, Hackers and Founders, Angel Pollination, all of that. So thank you for sharing that. We recorded this and we're going to share out some of these resources afterwards. So if you have more, throw them in the chat, because then we'll include them in the blog post and the email that we send out. So going back up here, the next question from Samir is, how does someone raise in this epidemic?
That's a great question. I would say, this is gonna sound really like counterintuitive, but I would say that the way you raise during the epidemic is to take the time that you have extra to reevaluate your business and see if your business model is effective. So that way, when things open back up and you're able to have more access to VCs, you are sharp and you're on point. We have a lot more time than we ever have to do things. So you have extra time that you didn't have before to really focus on your business, or see if you can pivot and see if there's solutions that were created from this pandemic that you could solve for. So I think it's not in a direct way of how you can raise money for your current situation, but I think it's an opportunity to reevaluate where you're at and see if you're effective in what you're doing.
I would add to that, look internally and make sure your operations on the ship you have are running extremely effectively, and so that you have as much runway as possible, because fundraising seems to be all over the map. We're hearing from some people saying, oh yeah, we're totally open for business, and we'll see if the numbers show it in the coming quarters about who's actually writing the checks. So I've been hearing just a really mixed bag from different people that I know that have been going through fundraising. The other thing you should do is, if you are thinking about fundraising, there's something you do now and you do it before you fundraise. You start figuring out who you actually want to talk to. Who do you want to get in front of? And you should be doing this several months in front of anticipating a fundraise. You do not wait to start identifying the people you want to target for when you start raising. You need to be in advance of that, because you need to be building relationships and you need to be finding the network that can get you warm introductions. You don't want to wait, if you're going to fundraise, get all your deck ready and ship it to a bunch of people cold and think that that's going to get you anywhere. It's probably not, if you're going to fundraise. So you can do things in the interim, like you could start monthly newsletters that keep prospective investors up to date. What are we working on? Are we making progress? What milestones are we thinking about hitting before we're fundraising? And what will demonstrate to someone who might want to invest in you that you're credible? That's something you can think about and start putting all of those pieces in place now. And that should help have easier conversations when you actually go to talk to people that you want to raise capital from.
Right. Because if you're just sitting there waiting and they're like, what have you been doing? It's like, I'm waiting for you guys to start giving out money. It's like, okay, well, yeah, if your solutions are still back from like January of 2020 or December 2019, and you haven't really evaluated the market or where it's at, because the markets have changed drastically now. So like, if you're not solving for that right now, then you're not going to raise money when people are ready to get money back out.
Absolutely. We do have another question came in from Jay. Jay is wondering, any recommendations for a service business in particular, or how different types of businesses should look at this differently?
Just with regard to raising money, then how services businesses are different. I mean, I would say, I guess it depends on the type of service. If you're talking about like a consulting agency where your every hour, every dollar you bring in is tied to an hour that you're working, I do feel like that's like somewhat of a harder sell unless you are talking with strategic partners that really need the service that you want to provide, and they may look at an investment as a way to offset some of the costs that they're going to be outlaying over the course of however long you're going to be engaged with them. But yeah, it's an interesting question. I wonder if Amber has more insight there.
I do actually, because I had a services company before. I would add, if you're thinking about a services business, the big thing to think about is what does scaling that business look like? So a lot of times if you're looking for investors, they're going to be looking for a certain number of return in that investment. So you have to think about, okay, if I'm scaling services, like Ben said, is it tied to the hours? Is it tied to something different? How am I going to scale quickly? How am I going to have a pipeline of people that I can bring on if I need to scale? And it's not that you can't, you just have to have all of that really well nailed down so that investors understand how they're going to get a return. Is it always going to be a service business, or will there be a product spun out of it at some time as well? So a lot to think about around where you envision you're trying to go with that services business. So that's where I'd start.
Awesome. Anne wants to know, can you chat a bit about female representation in the startup landscape? Are we still at a minimum? Trying to be realistic about how much of our product story should reflect female ownership. Amber, why don't we start with you?
Like, oh boy, winner, winner, chicken dinner.
Yeah.
Okay, some hard statistics I've heard in terms of tech founders, female tech founders. I have heard it's 9% right now. I do not let that intimidate me from talking about it. I am a solo female tech founder of my company, proud of it. I actually think it's fine for it to be part of the conversation. Will we face disadvantages in fundraising or other things? Statistically, it says probably. But then again, that's why you have all of these strategies and you bring your army, you bring your network, you bring your connections, you bring your whole set of people. So yes, there are traditionally less of that, but I would actually say we're a pretty welcome addition to the community. I found a lot of people want us here for the differences in perspectives. So yes, less, but I still feel very welcome in the community.
Sam, do you work with a lot of female founders?
Mhm.
Anything you want to add to that?
Yeah, I would say it's definitely still a lot of work that needs to be done when it comes to just making sure. I mean, there's a lot of work that has been done in regards to highlighting female founders and making sure that their stories are being told, providing platforms. But there's still, when it comes to actually dollars that are getting invested, even more specifically with female founders of color and Black women in particular, it's like 0.5 of 1% of VC funding goes to Black women founders. And it's not that there's not Black women founders out there. So it's like, why is that? What do we have to do to make sure that that number increases drastically moving forward? What are some things that we need to understand when it comes to like who's giving out money and why? So what are some of the barriers that are there when it comes to not just from a gender perspective, but from a cultural or racial perspective? Or are the solutions that are being provided that are maybe pertaining to a specific demographic that the VCs aren't familiar with? Is that the reason for not wanting to invest? Probably, right? So how do you bridge that gap so that way it connects the dots and they see the opportunity in the market or even value the market as a viable investment? Those are conversations that need to be had. I think people just need to be more educated on the fact that there's different groups of people that spend money at a large rate and that are often ignored when it comes to being invested in or being valued as consumers, but they'll gladly take the money at the end of the day. But it's not, but investing in the people that provide solutions for those people is always been a challenge. So I think that, long story short, I think that we still have a lot more work to do in that area, but I think that, we are, at least my experience working with the female founders that I've worked with is very sharp, have great solutions, have been able to navigate the waters a little bit better and see some traction and success, but there's been a lot of challenges along the way. So I'm looking forward to being a part of helping with making that a little bit better. And I know that a lot of people just want to get their story told and their products like looked at, and that's really what I think needs to happen next.
Yeah, and I would also encourage you to be connecting with the incredible community of female founders around town. There's a bunch that are connected to some of the different um, women and BIPOC focused accelerators. And so if you want some help making those connections, feel free to reach out to me. All right, another question came through. It says, a little off topic, but I'm in the dreaming stage of a small retail product. I personally refuse to do anything Amazon, eBay I like. if I ever get to market, do I swallow my pride and go to Amazon, or do I stick with my principles and do eBay, etc.?
That's a great question. I can answer this a little bit. I would say it all depends on, at the end of the day, I know some of Amazon's practices when it comes to how they treat vendors and people that sell on the platform are challenging, and just a lot of people don't want to give money to a $1 trillion organization. I understand it. But at the same time, you have to go with where the market tells you to go, and like where people are purchasing, or where you're going to have the most exposure for your product and get a better return. So if the platform that people are using for your product is Amazon, and you can generate some consistent revenue there, look at what that looks like. And then try to identify other opportunities for you to get exposure and creating some residual income coming in from like your platform, your product being purchased. If it's a retail product, you have an opportunity to like put it on some kind of a subscription model. I think I always like that strategy too, because that helps provide consistent revenue coming in. And if you're looking for a platform, I have a plug for a client that I used to work with, Upscriber, is putting something for that, for subscriptions, for businesses who want to create subscriptions. It's a really cool platform that started here in the Twin Cities. So I would check them out. It's just Upscriber, like subscriber, but Upscriber. And I can have Maria send that out too. But those are some alternative versions. But I know people still use eBay. I still buy some things off of eBay, but I know it's like died down because Amazon's kind of risen. So it's totally up to where you're seeing more people being comfortable purchasing on. Amazon's really convenient, and they deliver. They have their whole thing set up. It's a machine. So I don't know.
Yeah. Any other thoughts, Ben or Amber?
I mean, I would say, it sounds like, making like $1 million, $1 billion isn't really the thing that's important to you, that drives you. If having a principled stance is one of the most important things for you, you can find that community online. There's certainly other retail avenues online that you could go to. I mean, Etsy comes to mind for like sort of crafted goods and things like that, and they have had an ecosystem of supporting that type of thing. So yeah, I mean, not everyone needs to like grow a business. You can just have a business. You can just run a business. It doesn't have to grow all the time. That's I think a thing that kind of gets lost sometimes, is like, maybe I just want to make enough money to pay my bills.
Mm-hmm. I would also add, if you could consider Shopify too, another competing platform that is enormous as well. So that's another place to think about. You just would have to research them and see if it aligns with your principles as well. The other thing you could think about really depends on what the product is. And so I have no idea why I thought of this, but I'm going to give an example. So when I go into Able Brewery and I buy beer at Able, they sell dog cookies because it's a dog-friendly brewery. And whoever makes those dog cookies is doing well, because people are throwing in a dog cookie when they buy their beer because they brought their dog. So this idea of where are the customers that you want to sell to? Is there someone else you could partner with for those sales where it's like, oh, it's a slam dunk? Again, depends on what the product is. So just really think about, how can I find some of those people and you could do some early experiments with some of that as well, without having to invest in a ton of inventory or other things to get ready for some of those bigger platforms. So that's where I would start if I was looking at a retail type product.
Totally. Yeah, and Brady actually said it. And if you decide to stick to your principles, maybe become a B Corp or use not going through Amazon as part of your marketing. Both really good pieces of feedback.
Good advice.
Yep.
Yeah, we have 5 minutes left. So put your last questions in the chat for these folks. As we're waiting on that, though, I want to know fundraising hot takes. Who has them?
Fundraising hot takes.
Didn't we just give them all?
They're kind of my hot takes are kind of warm now. I don't know.
Oh, that's fine.
But Ben, you got anything? I see your wheels are turning a little bit over there. What's going on?
I'll say if you're going to do a crowdfunding campaign, it's not like a build it and they will come sort of thing. You kind of have to create create news all the time. So every week at least, maybe even more often, come up with a new part of your story to share with the people that are interested in your campaign. At Smart Things, we did this by like partnering with another campaign that was going on that had some buzz around it. And so like we were like, okay, we'll introduce a new tier that like sort of cross-pollinates those campaigns, so that like if you back at this level, you also get this thing, and just be innovative in there. Don't like stick by the rules that are like sort of set up for the platform. So yeah, just sort of like fabricate excitement and news.
All right.
I'll add one last one as well.
Yeah.
I didn't talk about this one before, but for those that are thinking about fundraising, first of all, VC is not your only money. There's angel money as well, and we've talked some about that, but there's also look into SEAL agreements, shared earning agreements. There's actually agreements and alternate financing out there that exists that effectively lets you buy back equity for certain multiples. And so if you look into folks like Indie VC, Earnest Capital, there's more and more of those folks are starting to pop up, and they're different types of investments. And they may be more of a fit for someone who says, well, I need some funding to get me through a gap, but I'm not looking to go big VC. So that's another thing to think about. Not as many people know about those as well. So that's my hot take on fundraising.
I like it.
Yeah, I would say hot take on fundraising, again, is not all money is good money. So just pay attention to who is providing that money for you. Just kind of like you have your kind of like when I tell clients who are just looking for traditional loans, like not all loans are good loans. Like you have predatory lenders, you got you know what I'm saying, guys that sharks that are out there that are just looking to take advantage of your desperate situation. So really pay attention and to who you're getting money from. Do your research as well on them and see how they are as a lender or a firm or an angel or whoever. Ask other founders if they've taken money from them, what their experience has been like. As you're building your community, leverage the other founders that you work with and say, hey, have you taken money from this person? What's the experience been like? Things like that. I think those things are healthy and helpful. I know from like when we created our Gravity community, that's kind of the things that we did to make sure that people were having good experiences. So yeah, I think I'll just stay there.
That's fantastic. One quick question for Amber. Dave wants to know, what was the last financing source type called?
SEAL agreements, sometimes they're called shared earnings agreements, there's a few different names for them.
Well, I want to thank our amazing panelists, and I also want to thank all of you who were able to join us today. Want to hear from everyone, anything that you're plugging right now? Maybe Amber, got anything you want to share with the community?
Oh, I'm always up to mischief. Stay tuned. I have some stuff I'm going to be launching in a couple months. Mischief is afoot.
All right, I love it. Sam?
I would say just keep a lookout for our speaker series for the Center for Economic Inclusion. And then we're having our summit on December 4th. We're hoping that we can do it in person, but who knows? So it will be virtual if not, but I know I'm going to be speaking and talking about my experience with Gravity. It's kind of weird because I was actually pegged to speak at the conference before I got the job, but I'm still speaking at the conference, so that's pretty cool. But we're talking about the Gravity experience and kind of why we built that, and just the experience of founders of color in the tech space. So be on the lookout for that. That's in December, but we're going to be having some different events leading up to that. So yeah.
Cool. Ben?
I don't really have too much right now, but if you wanted to make a connection with me, you can usually find me online at alttext, either at alttext on Twitter or alttext.com. That's alttext.com. You can probably find me, and I'd be happy to answer other questions or whatever if you have them. So.
Fantastic.
Yeah, I'm also on Twitter and LinkedIn and Facebook as well too.
Wonderful. Well, we'll include the links to this with the video that we send out. Thanks again for joining us. We got another mini AMA coming up in a couple weeks, I believe on the 22nd. That is on 3D printing 101. So if you're ever interested in some of that, you'll learn about it. All right. Thanks again. I hope everyone has a good rest of your day. We'll talk soon.
Thanks, guys. Take care.
Bye.